Good morning. Welcome to our regular second Saturday webinar. Hope it is audible to all. As usual, first we will have the current market scenario presentation. Then we will have recommendation. After that, I will try to answer your queries. So before starting the presentation, a brief snapshot on TCS result which came post market hours yesterday. TCS results were slightly below expectation. Profits were slightly lower. Company is a very big company, so there is a possibility of small misses here and there. So what we expect is that Monday morning, I'm expecting a marginal decline in stock prices, 2 to 3% in that range. But after that, again, it will rebound in coming days. So nothing to panic because of the small fall in stock prices. Company has given a very strong outlook for the next few years, and they are recruiting aggressively. So there is nothing to panic in TCS results. Though there is a small marginal miss, we expect IT stocks will continue to do well. Moreover, next week, all other major IT companies are coming out with the results. Infosys on 13th, then Wipro is coming, HL Tech is on 14th. So Monday morning, we may see marginal fall in IT stocks, but nothing to worry. It's just a technical fall. And after other companies coming out results, we may see again stocks going up. So coming to the presentation, so Sensex has touched the psychological level of 60,000 mark, and the bullish trend continues. What we are seeing is many individual stocks were doing well. Like day before yesterday, Tata Motors did very. Reliance was doing exceedingly well, went up by nearly 4%. Then few days back, all the power stocks were going up. So the action pack continues in the market. And more importantly, globally, if you see, Indian market has outperformed many other markets. So Indian market is one of the best performing market among the world in the recent months, and they have outperformed significantly even when you compare to the emerging markets or any other markets. The Indian market has outperformed very well. And one important thing which is happening globally is that lot of news were coming out of China, and China is going to be the center stage in coming days. 2 weeks back, we heard that one big Chinese company, real estate company, is going to default Evergrande. Now, last week, the news was that there is a lot of power shortages in China, throughout China, and there is a huge supply disruption is happening in China because of the power shortage. So the China is going to be the center stage in coming months, and it has to be closely watched. On theme wise, if you see, means PSU stocks were doing very well. As a theme, most of the PSU stocks were doing well. Already last month, we told that PSU index is likely to do well in coming days because of various reasons, and the bounce back has happened very sharply. So one of the reasons why PSU stocks were doing well was that most of the PSU companies were involved in economy stocks and in energy business and utility business. Company like ONGC, Coal India, they were in energy business. There is a sharp rally in global energy prices because of shortages. So these stocks got benefited. Then oil marketing companies were there, which were engaged in the distribution of this fuel. Then power utility companies were there. Power as a theme is doing well. So most of the PSU stocks which were in world economy, they have started doing well as expected. And we expect that it will continue to do well because of the emerging news flow we are going to get in coming days. Many divestment news, it may come through divestment news, it may come through special dividends like that. So PSU as a theme will continue to do well, but it should be seen only as a tactical theme. And overall, if you see, means Nifty and Sensex, it has gone up by almost 3% in the last 1 month between last meeting and this meeting. and mid and small cap around 6 to 7% it has rallied. So overall, for the last 1 month, it's a very good market, and many stocks has participated. And as a theme also, many themes like PSC stocks did well, power sector did well, and like that, action-packed month was. And if you see that many companies were going up randomly. For example, Tata Motor gone up because of some brokerage upgrade, and Tata Power was going up because of the shortages of power in China. And yesterday, if you see Reliance, it was going up without any news. So based on my experience, why these stocks were going up is that what I feel is that this company is likely to raise significant amount of money either through stake sale or some corporate actions or issue of fresh shares. That is why these stocks were going up, and we don't know who is buying these stocks. But generally, whenever a company wants to raise money or wants to sell a part of its subsidiary shares at a higher valuation, means stocks first used to go up very sharply without any news, and then the actual news will come. So what I'm expecting is that in Reliance, Tata Motors and Tata Power, some stake sale news or some fundraising is going to come in coming days. If you take the Indian market, in near term, we are relatively better placed among global markets. Some of the reason why I am telling is that the Q2 results, which are going to come in the next 45 days, is to be very good for most of the companies, especially companies in financials and consumer facing companies. The results are going to be very good. For IT companies, there will be some cost pressure because of a salary hike and because of higher attrition and because of training given to freshers. So there may be some margin pressures for IT companies, but guidance will be very strong for IT company. So what we are expecting is that most of the company results which are going to come in the next 40-45 days is going to be very good, and it will give support to stock prices. The other thing is that in China, which is the second largest economy in the world, is likely to see a sharp slowdown because of power shortages, and as well as many regulatory, because of many regulatory problem that is going to make Indian markets very attractive. And many foreign investors right now which are staying away from Indian market is likely to come back in a very big way. And the other thing is that Indian market is outperforming a lot. Whenever a market outperforms relatively to other markets, many momentum chasers will come and buy, because whenever a market goes up very sharply, means technically it will look very bullish. So technical breakout will be there, and many guys who are watching technical, they will come and buy based on the breakout. And there are many momentum players and speculators who generally come and buy shares where there is a lot of momentum and where there is a lot of outperformance. So because Indian market is outperforming a lot, I'm expecting a lot of momentum chasers and speculators and short-term traders will focus on India, and they will come and buy. And this is the chart between emerging market and Indian market. And if you see that this is the chart of this emerging market, actually emerging market, if you see in the last 3-4 months, it has been continuously coming down. On the other hand, during the same period, if you see this MSCI India follow these indices, they generally don't follow Nifty or Sensex, but they follow this Morgan Stanley Capital Index, MSCI Emerging Market Index, and MSCI India Index, where many foreign investors they follow. If you see that index, the emerging market has come down. So there is a big outperformance for an Indian market between MSCI Emerging Market and MSCI Indian Market, which will make Indian markets attractive for many short-term players, as well as for many speculators, as well as for many guys who are seeing technicals. Because whenever a company or as a country does well, means naturally it will attract buyers for its relative outperformance. And the chart clearly shows that MSCI India has done very well, whereas MSCI Emerging Market has come down, which will make Indian markets more attractive. The other positive news which came in the last 1 week is that the Moody has upgraded India's rating outlook from negative to positive. So it's a positive change. Actually, it's not two parts. One is the core rating. The second one is the outlook. Now, what Moody has revised is the outlook only they have revised. It has been kept to negative. Now it has been revised to positive. So when positive comes, what will happen is that there is a possibility of rating upgrade is possibility. And there is a talk that in the month of January, February, India bond may get added to MSCI bond index. So if that happens, means then there will be an expected inflow of around $20 billion. Follow MSCI bond index they used to follow. India right now is kept outside that index because of some issues, because of rating issues and other technical issues. So now rating has been revised to positive and outlook has been revised to positive. And if rating is revised upwards, means then immediately there is a possibility of that India getting included into the MSCI bond index, which will attract around 20 billion worth of foreign money into our Indian market, in bond market, not in equity market, in bond market. So the reason why Moody has revised the outlook is that what they have told, the main reason why they have revised the outlook from negative to positive is that the downward risk between real economy and financial system are receding. And that is the main risk they have cited for outlook revision. What they are telling is that, that most of the NPA is over now, and financial system is very robust now to handle any near-term shock. And the downward risk in the financial system and between real economies does not exist. So that is the reason they have cited for upgrade of India's rating outlook from negative to positive. The other positive news which has come in the last 10 days is that most of the company which has given commentary for their Q2 performance has been very good. For example, Titan, day before yesterday, if you see that Titan stock went up by almost 8-9%. It is a 2 lakh market cap company. 8% means almost 16,000 crore market cap. It has gone up in a single day. And why the stock went up is that they have given positive commentary on the Q2 performance. Previously, what used to happen is that company used to announce Q2 results in between 45 days, between the end of the quarter and from there 45 days time is given. But what most companies are doing is that during the first week of end of quarter, they are giving commentary about how was the quarter ended. So Titan has given that commentary, and they have given very positive commentary that sales has been, most of the shops, the sales has been below, has been at pre-COVID level. So that is the commentary they have given, and they have given a positive outlook also. Based on that, Titan stock prices has gone up. Similarly, companies like DMart, M&M Finance, Federal Bank, and many real estate companies, they have given very positive Q2 commentary, which indicates that the Q2 results which are going to come from here on is going to be very good. And yesterday, if you see that one of the biggest positive news which came was the Air India privatization is over. So Tata has emerged as a winner in Air India privatization bid. And what is the important thing about this Air India privatization is that government has been trying to sell for the last 20 years. Government is trying to sell this Air India, but they could not done it. But this government took some bold steps, and they have privatized it. Why government has privatized it is that Air India is a big cash guzzler. Between 2010 and 2020, the government of India has almost pumped in 1 lakh crore in Air India. That is almost 10,000 crore government has been putting in Air India to fly. 50,000 crores they have put in as equity, and 50,000 crores as a government guarantee. So every year, in order for Air India to function, government has been putting 10,000 crores in it. So this Air India, once if they sell this Air India, means what will happen is that from next year onwards, that burden for the government will come down. So from here on, government will not won't be needed to put in money in Air India to survive. Now it's going to be the Tata's burden. So that is why Air India privatization is a big bold step. Why I am telling it's a bold step is that actually Air India has almost 60,000 crores of debt they are having. Now Tata, they took over only 15,000 crore debt they have took over. Balance 45,000 crore debt Air India will be taken over by the government. That means government has given almost Air India free for Tata Sons, and there is no other option, because if you ask some heavy huge money for loss making and likely to make loss in coming years, no one will come and buy. And government took some bold step, and they took over 45,000 crore of debt from Air India, and government and what I expect is that in the next 2 years, 3 years, most probably Tata may make it profitable, because Tata is also having some other airlines. They may merge with Air India. After 1 year, they may retrench some staffs for the next 1 year. It is not possible to retrench as per agreement. So after 1 year, they may retrench some staff, and they may make it profitable. Maybe it may take 3-4 years to make it profitable. And most probably now it is going government from here on, we will not need to worry about Air India survival. And every year government may save around 10,000 crores from it, and it's going to be a big privatization. I will tell, among whatever privatization happened till now, this Air India privatization is a big one. Actually, Tata independence in 1953, government took over this airlines from Tata and nationalized it. Now again, after almost 70 years, Tata took over that airline again. The another big privatization which how government is putting a lot of money for it to survival. And I hope once the Air India privatization is over, next government will think about this BSNL. The other companies like Nalco, BPCL and all, they are profitable company. It is very easy to divest these companies. Air India, because of its cash BSNL, government took it so long, and next BSNL will be in focus, which will be a problematic PSU for divestment. But other companies, I am expecting that government will easily privatize it. I think before March, I am expecting at least 4 companies to get privatized. One will be BPCL. Then there is a very good possibility of Container Corporation also to get sold over before March. Then BEML is there. Then Nalco and some metal companies also possibility is there to privatize it. But it is very easy for the other companies to privatize it. We won't have much legal issues in that. Monsoon update, if you see, it was very erratic, but finally it ended very well. One of the very erratic monsoon we have seen in the last 5-6 years. June was generally 4 months of monsoon we have. June, July, August, September. June was very good with surplus. July was slightly lower. August was very bad month. The deficit was more than 20%. And September, if you see, it was an extremely good month overall. So if you combine June, July, August, September overall, the overall rainfall deficit is just 1%. So any deficit less than 4% is called a normal monsoon. And last year we had just 1% deficit. Last year means just ended year. 1% deficit means it's a normal monsoon. And if you see the last 3 years, I have plotted it for last 6 years. And if you see that 19, 20, 21, the monsoon is normal. In 19 we have 10% surplus rain, 29%, and 21 if you see that it is -1, which is a normal monsoon. So 3 consecutive year of very good monsoon. So it is going to help rural economy a lot, and we expect that agriculture protection to be very good in coming months, and it will give big support to the rural economy as well as rural consumption also. So So we had a third consecutive normal monsoon. It's a big positive because right now fuel and energy inflation is going up a lot. So during this time, if a bad monsoon comes, naturally food inflation also will go up. Luckily, we had a normal monsoon this time also. 3 consecutive normal monsoon we had, and hopefully this will put inflation, food inflation under control. And if you see that 2016, 17, 18, 3 years we had a very average monsoon. 2018 -9, 2017 -5, and 2016 -3. So 3 years of very average monsoon, and now followed by 3 years of very good monsoon. So energy prices. One big concern happening globally is the skyrocketing of energy prices. Basically, three energy we all know. One is the crude oil, then the natural gas, then this coal. All the three has been going up very sharply. Crude oil now crossed $80 per barrel, around 83. Now it is this Brent crude. And if you see the natural gas, it has gone up very sharply from 2.5, it has gone up to 5.7, more than 100% up move in the last 1.5 months. And if you see the coal price from $50 per ton to $28, almost 4 times coal prices has gone up, a vertical rally in coal prices in the last 1.5 months. So definitely it is going to put pressure on power companies, because coal and natural gas are the crucial raw materials for power generation. So once the raw material prices goes up, means naturally power cost also will go up. And why we are seeing a sharp increase in the energy prices, I will tell in next slide. Natural gas, crude oil prices gone up. Natural gas and coal, and crude oil, I did not include it because we are watching it closely. That's why I did not include it. So one of the reasons why energy prices are going up, all the energy prices are going up very sharply, is that a few years back, globally it was decided that coal should not be used. The consumption of coal should be gradually reduced, because it is causing a lot of pollution in the world, and it is that a lot of carbon is coming out of it by using coal in thermal plant. So many developed countries and many, even China, has decided that the usage of coal has to be reduced because of this environmental concern. So new investment in coal mining got stopped because of that. Moving towards this renewable energies. It was that during COVID time, the consumption of energy was less. Just when the world got to pre-COVID level, the solar and wind energy, the renewable source of solar and wind energy, could not able to fulfill the power demand because of the economy reviving to pre-COVID level. So what happened? European countries started buying natural gases from heavily from Russia. China, 1 year back, they stopped importing coal from Australia because of some geopolitical issue. They stopped it because Australia want to probe on coronavirus origin. They put allegation that it originated from China. That made China anger, and they stopped importing coal from Australia, because China used to import a lot of coal from Australia. When Australia made allegation on China that coronavirus emerged from China, China stopped importing coal from Australia due to this political issue, and they started buying from other sources. China was the main supplier to, sorry, Australia was the main supplier of coal to China, and once China stopped buying from Australia, a lot of shortages came into China of coal, and they started buying from other countries like Indonesia, but that coal did not suit to the China plant, and that made a problematic in China, which where the power production came down. So if you see that Europeans were buying a lot of natural gases, which made the prices going up very sharply. And China, which is started buying coal from other countries, from Indonesia and other countries, and that also made the coal prices to go up very sharply. The main issue here is that the renewable energy, where everyone is talking about, that is solar and wind, it is a highly unreliable, because whenever there is a slow wind happening, means the wind energy generation will be lower. Similarly, solar power, if you see that the power generation will be uneven. During daytime, the generation will be good. During nighttime, the generation won't be good. So it will be very cyclical. So entirely relying on a renewable sources like solar and wind will be a big issue in coming years. So parallelly, all has to go on. Coal, which is used for thermal power, then hydro, then natural gas power stations using natural gas, then renewable energy. If you want to completely depend on solar and wind means, then we will have a lot of disruption in coming years, and we cannot run it. The other big source of energy is the nuclear power. Right now, most plant, but at some point of time, many countries will start thinking of putting a nuclear power plant, because without it, it will be very difficult to survive in the future. Otherwise, we have to keep on using coal. If someone wants to avoid thermal power plant because of environmental concern, then they have to shift to nuclear power. Otherwise, then consumer has to bear a lot of cost if they completely depend upon solar and wind. Now there is a huge shortage of power outage in China. Big issue is happening there, and because of that, what is going to happen globally? If you see, means China, which is having a significant global market share in basic chemicals, key starting materials for pharma. Already there is a huge shortage of material, and some of the basic chemical prices like soda ash and caustic soda went up a lot, because these chemicals need a lot of power for manufacturing. Caustic soda needs a lot of power to produce it, and since there is a huge power shortage in China, Chinese companies stopped manufacturing caustic soda, which has made the caustic soda prices to go up very sharply. And in India, if you see companies like Gujarat Alkalis, then the Tata Chemical, which is in soda ash, Gujarat Alkali is in caustic soda, and Tata Chemical, the end product prices have started going up significantly in the world because of shortages from Chinese manufacturing. And some other key starting material for pharma and agro prices have also gone up. And if you see in the last 2 days in CNBC, 2-3 company management came on TV, they started telling that many starting materials for pharma and agrochemicals, they have gone up 3x, 4x like that in the last 2 months because of power issues in China. So basically what it is going to happen is that it is going to affect many sectors, the issues which are happening in China, because China is the factory of the world. And if you some of the essential sectors like agro and pharma, it will get affected a lot, and it will affect common citizen. And even in yesterday, if you see that I saw in CNBC that one toy manufacturing company in China, they told that it is a peak season for them, because they manufacture a lot of toys and they export it to US for Christmas. Now that is getting affected. Now they could not able to dispatch the order because of power outage. They are asked to run the factory only for 2 days in a week. That means that they could not able to fulfill the order, and they could miss their key Christmas orders because of power outages. So we are going to see a lot of supply disruption happening because of the China issue, and consumer across the world are going to face some sort of inflation for Chinese product. Toys and all not necessarily is not an essential item, but some of the pharmaceuticals, agrochemicals and all is essential for every human being. And if that prices goes up, means it will affect globally. So we have to see how long the power crisis in China will happen. If it's sustained for long, then there is going to be a sharp spike in inflation in many products in coming months. So inflation is going to be the big threat to global recovery. Right now, globally, globally, if you see, many countries are keeping their interest extremely low, around 0%, 1%, like that. Some of them are even having minus interest rate. One of the reason why they could able to keep interest rate very low is the inflation is very less in these countries. Now with energy prices going up very sharply, there is a possibility of inflation going up. Inflation, if global inflation goes up, means countries naturally they will hike the months, and inflation doesn't pull down, means there is a very good possibility that some of the countries in Europe and the US, they may start hiking interest rate, and it would be a threat to. And if you see that this is the US bond yield, see that the bond yield already started going up in the US. Actually, I took this chart one day before. It was 1.59, the bond yield. So the bond yield have already started going up. It indicates that the bond market already started reacting in anticipation of interest rate hike in coming days. Most probably, initially tapering will come, then the interest rate will go up, and we have to closely watch the energy prices, because crude oil prices continuously going up. Then there's coal prices going up. It's not good for inflation. It has a significant weightage in the inflation, and prices going up continuously is not good, and we have to watch it very closely. Suppose if interest rate goes up, means the main thing it will impact first is the new age technology stocks, because many startups are getting funded. One of the reason why it is getting funded, even though they are going to make loss for the next 4 years, 5 years, is that right now the interest rates are at 0%. That is the main reason. If interest rate starts going up, means the startups are going to get affected immediately, because their funding may get affected. And my own belief is that last time in 2008, when the issue came, it was from US. But this time, suppose if a global economic crisis, if any comes, means it is going to come from China. It's a country to watch in coming months. It's not going to happen immediately, but it is a country to watch in coming months. Big negative news, anything has to come globally, means it will come from China only, because already we have seen that the two negative news came from China. One is the Evergrande debt issue. The second one is the power crisis in China. What is happening in China is that they are turning into a real communist country. In the last in 1980, they started 1979-80, they started globalization, and in the last 40 years, many people in China started feeling that the inequality has gone up very sharply. There are so many rich people in China, but there are many laborers who are China whose life hasn't gone up like the country has moved up. So that has come in the mind of many people in China. So what government has decided to do is that in order to satisfy this majority of the population, they are taking lot of action which are almost equal to a real communist country. That is that inequality they want to reduce in China. For that, no, they are taking action in real estate, education, and healthcare sector, so that all these three has to be made affordable to most of their citizens. So what the current president, he has told that his policy will be towards common prosperity. It is the word he has used it. Common prosperity means that everyone has to grow. Previously, in the last 40 years in China, what happened is that because of globalization, very few percentage of population become very rich, but others were labors for most of the time. In order to avoid that, they want that growth should be equal to all, and everyone has to grow equally, which is called common prosperity, and their policy announcement will be towards that. Like that only, they have started announcing policies for the last 7-8 months. And if you see that whatever they are announcing, it is towards real estate, education, and healthcare sector. First, what they made is that 2 months back, they made education sector as a non-profit sector. Somebody who is doing business in education, he cannot make huge profit. We all know that in India, education is a very big business. The company Baiju, which is basically an education business, their market cap has gone up very sharply. Their valuation has gone up very sharply because everyone feeling that education is a highly profitable sector. This tuition is a very highly profitable sector, and can make money very easily in that. But in China, if you see that they have made it as a non-profitable sector, that means everyone will have an affordability towards education. Similarly, real estate prices, which gone up very sharply in the last 20 years in many key cities in China, which is totally unaffordable to majority of population in China. They are taking steps so that real estate prices get cooled, and people can start buying it. And many policy announcements were related to that. Similarly, the healthcare also the Chinese government wanted affordable to many of them. So these three crucial sectors government is watching very closely: the real estate sector, education sector, and healthcare sector. They are watching closely, and they are unlikely will allow inflation into this sector. And even yesterday, if you see that from China, I heard a news that they are going to take action on many fintech companies in China, where they are charging abnormal interest rate and other things. And like that, daily some news are coming from China, and most of the policy announcement is towards common prosperity. And because of this policy announcement, the first casualty already happened, which is the Evergrande real estate company. Evergrande is a Fortune 500 company. It's a 122nd in the list of Fortune 500 companies. So among top 500 company globally, Evergrande is on the 122nd rank. So it is the second largest property developer in China. And last 1 month, we heard a news that the company is unlikely to service its debt. Already this Evergrande share, which was trading in Hang Seng, it got suspended. Now they could not able to pay the interest. And after 1 month, suppose if they could not able to pay the interest within 1 month grace period, means the company will be declared as defaulter. And there is a very good possibility of default, Evergrande getting default. Why it has happened is that 1 year back, government, because of very high prices, real estate prices, government made some restriction on companies to take loans from the banks. Why prices were going up very sharply in China is that real estate prices, most of the property has been bought by these real estate companies like Evergrande. They were taking loan from the bank, and they were buying properties in China. Actually, in China, nobody can own a land there. As per the rules in government rule in China, nobody can own a land, but they can lease. They can take a lease from the government for 99 years, 50 years, for a certain period of time, and they can build a house there. But the land will be in the name of government only. Only lease only you can take. So what was happening the last 10 years, 15 years was that many real estate companies, they were taking loan from the bank, and they were taking lease from the government, and they were jacking up the prices like that. Now government has decided that because of huge buying by this real estate builders and jacking up the prices. They put some restriction on banks to lend to this real estate companies, as well as the companies. They were also put some restrictions so that they cannot borrow money from the bank for buying the properties. So because of this restriction, what happened was that real estate prices gradually started coming down, and the demand also got lessened because of the restriction made by the government. And on one hand, Evergrande took a lot of loan from the bank, and most of the money has been invested in properties which were semi-completed or partly completed, and they could not be able to sell it. So only if they sell only they could get the money and repay the loan. But because of a slowdown in real estate, what happened was that they could not be able to sell it, and that led to cash flow mismatch between the loan repayment and the money they plan to get it by selling the properties. So that is the reason why they were on the verge of default. Now what will happen is that now slowly they will sell the partly built real estate and they will repay the money. And many of them were telling that the Evergrande may be a Lehman-like situation in China. But Lehman problem was completely different. Lehman collapse happened in the year 2008, which led to global financial crisis. Actually, Lehman is not a real estate company. They were mainly dealing with the subprime property derivatives, and many other derivatives they were holding it. Whereas Evergrande is a real estate company, they were holding hard assets like flats and properties, which can be liquidated. If not liquidated now, they can liquidate in coming days. Whereas the Lehman was holding mainly financial assets. Financial assets, we all know that extremely volatile, unlike real estate asset, which is stable. Even a 10% drop in real estate prices is steep. Whereas financial assets within 2 or 3 days can fall by 50%, 60% very easily due to lack of liquidity. So this Evergrande and Lehman we cannot compare, but the first casualty because of the Chinese government action is the Evergrande. I still believe that the government will manage the Evergrande issue. It won't go out of control because they are having assets. Those who have given loan, they will take back some of the real estate assets from them, but it won't become like a Lehman Brothers collapse. So based on the slowdown happen in real estate and the power crisis in China, what I'm expecting is that I'm expecting a sharp slowdown in the Chinese economy. Right now, there has been no big downgrade for Chinese economy from economists, but my own perception is that real estate is a big contributor to Chinese GDP. So when real estate slowdown is there, then manufacturing also a big contributor to Chinese GDP. And because of power crisis, when companies were forced to run only for 2 days, even big companies like Apple, Tesla, they were forced to run for only 2 days in a week. Means definitely Chinese economy will see slowdown, and it's going to create some supply chain issue throughout the world. If you see for India, it will have some benefit because some of the manufacturing plants which were in China, it may get shifted to India, provided India should not face the same issue like China, like power problem. Suppose if India also got the same power shortages, means then companies won't come to India. Still, I remember that 10-12 years back in Tamil Nadu, we faced a huge power crisis. Every day, like what is happening in China, there used to be a 8 hours power cut, 10 hours power cut, like that. But right now, we don't have any power cut. Suppose if Indian economy grows very sharply without any backup of power, means definitely we will also get power shortages issue. Right now, there is a talk that Indian thermal power plants are running at extraordinary low inventory of coal, which may lead to power crisis in India also. But coal shortages, there are some reason is that because the last 4 months monsoon was there, coal could not be evacuated because of the monsoon. Now monsoon is over. Maybe the process may be quickened now for coal evacuation and supply to the power plant. But still, if the economy grows up very fast without adequate backup of power generation means, definitely India will also face some power issues, and India will benefit only if we get adequate, if we give adequate power to the manufacturers. And if you see that China, if you see that they are the second largest economy in the world. US is 20 trillion size economy. China is almost is nearing to 14 trillion. That is almost 70% of US size Chinese economy. So any slowdown in such a very big economy means definitely it will have impact on the global economy. And in coming days, we will see. Already there is a talk that government has quickened the coal production in China, and within 2 or 3 months, Chinese government is expecting that the power situation will get normal. And if they manage to do it means, then there won't be any issue. Suppose if it get prolonged for 6 months, 7 months, like that means definitely global economy will get slowed down. So one thing which is doing very well is the PSU theme. Already last presentation, I told that PSU as a theme will do well, and as expected, it has done well. One of the reason why PSU stocks were doing well is that very sharp increase in the commodity prices. If you see that most of the PSU companies like Coal India, ONGC, then we have NALCO, then we have SAIL, they are all in the commodity prices. And when commodity prices goes up, they will benefit immensely, and their profitability will go up very sharply. And if you see that from the 1st October onwards, gas prices has been hiked very sharply. Two companies that will benefit heavily is the Oil India, and the other one is the ONGC. And both companies profitability will go up very sharply from this October, November, December quarter onwards, because of very high gas prices. So when commodity prices goes up, PSU will do well, and because of a sharp increase in the coal prices, oil and gas prices, all this will contribute higher profitability to top PSU companies. And Coal India, if you see that they sell coal in two ways. One is the long-term contract, the other one is the through e-auction. So e-auction prices has gone up very sharply, whereas the long-term contract, only at the end of the contract only they could able to increase the prices. So Coal India also will get benefit partially because of higher e-auction prices. So overall PSU stocks will do well, but one has to remember that PSU stocks should be move in the PSU stocks should be seen as a tactical move only, because government policies are involved in many companies. For example, suppose if crude oil goes beyond $90 or $100, then they will ask ONGC not to hike the crude oil prices, because of political issue. They may ask ONGC to sell oil at a lower price than the market price. Like that, the involvement from the government will start happening. Generally, this type of involvement will make the stock trading valuation lower. In the past, we have seen in many times that ONGC, when crude oil was trading around $120, $100 like that, ONGC was forced to sell its crude oil at around $65, $70 like that, because of government did not want the burden to be passed on to the public. So government involvement will start happening once the prices goes up beyond certain level. Similarly, if they get huge profit, mean the government will forcefully ask them to give a huge dividend, so the government will get the dividend money. As well as they will ask them to go for a buyback instead of going for capex. They will force these companies to give dividend and buyback. So PSU stock movement should be seen as an tactical movement. My belief is that till the big ticket LIC IPO, which is expected to be 50,000 crore to 1 lakh crore, 1 lakh crore IPO, PSU stocks will do well. Till that, one can hold on. After that, one should start booking profits and exit from it, and it should not be held for long-term PSU stocks. Equity SIP flow, if you see, continuously going up, and it is giving huge support to our market. Even this week, if you see that FIS has been continuously selling, but equally it has been bought by the domestic institutions, mainly because of very high SIP flow. Right now, the SIP flow is almost 10,000 crores per month, which is equal to $1.5 billion. And it is a long-term money. This SIP money is a long-term money. People are putting for 5 years, 10 years like that. So unlikely to stop immediately the SIP contribution. The slow contribution will, when it will stop means when it starts underperforming for 2 years, 3 years like that, then we will start seeing the SIP flows slowing as well as money get withdrawn. So it's a long-term money, and we expect that SIP will continue to do well in coming years. And if some foreign institution, they start selling also, we don't expect big fall in market, mainly because of long-term money like coming through SIP, and they will give support to the market. Foreign flows, no big changes there. Just 1.5 billion inflow has come. More than 6 months has passed till October 9th. Just 1.5 billion inflow has come in the last 6 months, and October 10 days has passed. So no major inflow from FIA. So my belief is that once the Indian market started already started outperforming a lot. Once FIA starts coming in means, then we may see a sharp increase in the indices. Without FIA money in the last 6 months, 7 months, the Sensex and Nifty has gone up more than 20% with the help of purely from domestic money. One interesting thing which is happening and one has to keep in mind is the valuation. It's a very important chart, and if you see that this is taken on BSE 500 companies. BSE 500 companies. BSE, many companies are listed. Among them, top 500 companies has been taken. And if you see the valuation of these companies, if you see that the red is the companies which are trading more than 100 PE, and the blue chart is the companies which are trading at more than 50 PE. And if you see the companies which are trading at more than 100 PE is almost 50 companies, they are trading at more than 100 PE. So among BSE 500 company, 10% of companies were trading at more than 100 PE. So companies like Titan is trading at more than 100 PE. Like that, I can keep on telling some of the companies which may not in BSE 500 also. For example, Dixon is there. I have to check whether it is in BSE 500 or not. It is trading at 200 PE. DMart, it is trading at 200 PE. Like that, there are so many companies which are trading at more than 100 PE valuation, and still the stock price were going up. And companies which are trading at more than 50 PE, if you see, means there are almost 150, 160 companies are there. Companies like Asian Paint, Nestle, Hindustan Unilever, almost the entire FMCG pack, they are trading at more than 50 PE. Historically, they used to trade at 30 PE, 35 PE, like the 25 to 35 PE band they used to trade. Now they are trading at more than 50 to 90 PE, they are trading, all the FMCG companies. So the PE ratio band has changed historically. And if you see in 2003, the number of companies which were trading more than 150 PE was less than 10. Just a handful of companies were trading like that. In 2007 bull run, it went up. Almost 50 companies were trading with more than 50 PE. More than 100 PE, if you see, out of BSE 500 companies, only 20 companies were trading. Then the correction came. Then in 2017, again, it went up, number of companies trading at higher valuation. Then the correction came. Now again, it started going up. So the number of companies trading at more than 100 PE is almost an all-time high. Similarly, number of companies trading with more than 50 PE is almost at all-time high. So we have to be very careful in buying this company, which are trading at a very high valuation. Right now, the interest rates are very low. So many of them were telling that valuation one should not see the valuation, because if you are going to put money in your bank, I'm telling in US or Europe, you are not going to get any interest rate. Whereas if you get even 2% or 3% return in stocks, that would be the great. That is the reason just given for justification of very high PE. Suppose for some instance inflation goes up and in US and European countries interest rate goes up, means immediately the first casualty that will come is the PE contraction. Okay, stocks which are trading at 150, 200 PE, the PE contraction will happen. It will start coming into 100 PE like that. A very derating, very strong derating will happen in PE if interest rate starts going up. So one has to be very careful. Day before yesterday, yesterday and day before, if you say a company called Dixon Technology, already it was trading more than 100 PE. In last 2 days, the stock price went up very sharply. The market cap added in the last 2 days was more than 3,000 crores. The company used to show around 150 crore profit, and the market cap added was 3,000 crores in the last 2-day movement alone. That means it will take 20-30 years for the company to make the profit. For the market cap, it has gone up in the last 2 days. The same way, suppose if derating starts happen, means the sharp up move can reverse at the same speed. Unless you are having very confidence on the stock and you are very hopeful, otherwise you need to have a very tight risk management, like keeping stop loss. And if you buy very high valuation shares, means then it could well be a trap. You have to keep either a tight stop loss for this stock or some exit policy you have to keep, or otherwise you have to very much confidence in this stock to fold at very high valuation. Otherwise, because we have seen many times in the past, in 1992 during Harshad Mehta time, PE valuation went up very sharply for many stocks. Similarly, in 2000 it went up very sharply for many .com stocks in companies which are in entertainment as well as IT and in a communication related stock, all got a 150 PE, 200 PE like that. And next within 3 years, most of the PE fell very sharply to less than 50 because of sharp derating. The same thing could happen. So we have to be very careful in the stocks which we are buying. In COVID cases, if you see in India, it has gradually come down. Luckily, there is no third wave now. Many of them told that many people who are doing research, they told that third wave could hit India by September, October like that. By God's grace, there is nothing has happened, and vaccination also very strong. Even people are affected by COVID, it is very mild, and they are quickly and they are recovering very quickly. Globally also, for the last 4 or 5 weeks, the number of cases has been coming down. So it looks like that we have to live with the COVID for the next 2 years, 3 years, and the world will go as usual parallelly with COVID. We are not going to see any lockdown. Parallelly, COVID will be there, as well as the normal things also will happen. So on conclusion, if you see, means some volatility I am expecting in the market. Some stocks which are going for fundraising, they may do well, but my suggestion is that you don't chase momentum, because many stocks are going up by 20%, 30% within few days without any news flow. Unless for trading purpose, don't chase any momentum stocks going up by 40%, 50% based on some without any news or some unnecessary news. Don't chase momentum. If you are a trader, means you can always do it by keeping stop loss or some exit policy, or you have a very conviction on that stock that the earnings is going to improve very sharply in these stocks, means then you can buy it. Otherwise, don't chase momentum based on news flows which are coming. Generally, in bull market, no one will tell any negative news. Only positive news will get highlighted, and you should be very careful in a peak of the bull market. For an example, I will tell iron ore prices, which has been continuously going up in the last 1 year. Iron ore prices going up very sharply, and everyone in media, they were highlighting that iron ore prices going up, iron ore prices going up. going up, it will be positive for steel companies. It will be positive for iron ore manufacturers like NMDC. Like that, they were telling global iron ore prices going up. But in the last 1.5 months, if you see that iron ore prices fell by 50% in China and in globally. But no media has highlighted that iron ore prices as well. Generally, media used to tell only positive news. They used to tell during bull market. But in bear market, what used to happen is that the media never highlight positive news. They highlight only negative news. They used to highlight it during bear market. So we are in the midst of bull market. Don't chase momentum unless you have conviction on that stock. For trading, you can do it very well, because in momentum stocks will give very good return in short period of time. Always keep some exit strategy or risk management for trading while trading in this momentum stock. So that is the conclusion I have. Even Q2 results are going to come next week. We are going to have a lot of results, especially in IT sector. Almost all big IT companies and mid-cap companies like Mindtree are going to come up with results next week, and it has to be watched very closely. And the energy prices has to be watched very closely. Right now, the fuel prices, as both petrol and diesel prices, has gone above 100 rupees. And beyond certain point, it will be very difficult to observe by the public also. And we have to be watchful on these energy prices. It may slow down the economy if prices keeps on going up like this. So these two have to watch very carefully. Now, recommendation. So 5 stocks I'm recommending this time. 2 are having some momentum in having. So I have some stop loss in these 2 stocks, which is a Tata Motor and IEX. They both are having some news flows. That is why I have given in this. The other stocks, L&T, Tata Coffee, and GNFC, are based on fundamentals I have given. So L&T right now, L&T is the major player in the construction segment. They also have 3 IT subsidiaries. All the Mindtree, L&T Technology, L&T Infotech, all the 3 companies are doing well. Moreover, a lot of construction activities is going to happen. A lot of capex is going to happen in coming days because of the PLI scheme and the turnaround in the capex cycle. So the biggest beneficiary is going to be the L&T, and the stock price has already gone up, but still we believe that L&T has another still has upside left, and that is why we are recommending this L&T. Tata Motor, there are a lot of news flow is there. Recently, Morgan Stanley has upgraded the stock, and there are talks that Tata Motor is going to hive off its passenger vehicle into a separate subsidiary and electric vehicle, and it is going to be listed. Some PE players are interested to take stake in that, and it is likely to get a valuation of $6 to $7 billion. And because of this news flow, we could expect some momentum in the stock. The stock has already gone up. See, Tata Motor, if you see, means the only Indian automaker which has successfully launched their electric vehicle, 4-wheeler passenger vehicle in India till now. And based on the reports we are hearing that the vehicle feedback is good on this vehicle, electric vehicle, passenger electric vehicle from Tata Motor. And you have to keep some stop loss in Tata Motor. We expect that some news flow is going to come. Otherwise, the stock would not have gone up recently. Chip shortage is there. Fuel prices are going up, and the demand is less. But still, auto as a sector has gone up very sharply in the last 1 week. This indicates that some fundraising is going to come in the Tata Motor stock, which may keep the stock alive in coming days. The next one is the Indian Energy Exchange. And yesterday also we had a sharp up move in Indian Energy Exchange's price because of news that the government wants some policy changes. Yesterday they have announced one policy changes which is favorable to IEX. Right now, what is happening in power sector is that most of the power consumers were distribution companies like KSEB, TNEB, like that. They buy power from the power producers through long-term contracts, they buy it for power purchase agreement. So for 5 years, 10 years, like that, they put a power purchase agreement and they buy from the power producers. Government, what government wants is that a power consumer should buy power through power exchanges. They should buy. Consumers like KSE, BT, and EB, they should not buy directly from the power producers through power purchase agreement. Instead, they should buy from the power exchanges. They should buy. By like that, government wants to change the way how the power is traded. So it will give some benefit to IEX, and there will also be a competition for this energy exchange, because MCX may soon launch the power futures, and similarly BSE also there is a possibility of launching a power exchange, which may give competition to the IEX. But the market size is so huge that it can accommodate 4 or 5 players in that. Because of that means only IEX is going up from a power purchase agreement, market shifting from power purchase agreement towards power exchanges. It's such a big market, power market is, and it could benefit them. So that is the reason why we have recommended this IEX. The next stock we are recommending is the Tata Coffee. We are expecting companies to announce its quarterly results on 18th. We are expecting good results to come on, as well as the coffee prices has gone up very sharply due to lower production from Brazil, which will give support to the Tata Coffee profitability. And we have in short term, there is a momentum also there in Tata Coffee stock price, and we are advising to buy it. The last stock GNFC, we are recommending it. One of the reason why we are recommending is that GNFC basically they have 2 divisions. One is the fertilizer division, the other one is the basic chemical division. In basic chemical division, they manufacture nitric acid, methanol, then TDI. One product is there called a TDI, which is used for making sofas like that, and it's only manufactured in India. So basic chemical is a highly profitable division, and whereas fertilizer, it depends upon the government policies. And the company has a very strong balance sheet. They don't have any debt. Whatever they had debt 3-4 years back, they completely repaid it because of the profitability they got in chemical division. Right now, they don't have any debt, and the balance sheet is very strong. And because of the China issue, lot of basic chemical prices has gone up very sharply, which is favorable to GNFC. And we expect from third quarter onwards, the profitability will go up very sharply. And fertilizer division, there will be some margin pressure, whereas on chemical division, if you see, they may profitability and margin expansion will happen, and overall overall profitability will increase for GNFC. And valuation also available reasonably, considering its debt-free status. We are recommending this GNFC. And a review for last month recommendation, if you see that basically 5 stocks we recommended, 3 done very well. HL Tech, Canfin Homes, and Finalox, all the 3 has given a very good return. NAM India, Nippon Asset Management, and just marginally up from recommended prices. HDFC Life is slightly lower. So those who are having HDFC Life can still hold on. We expect that life insurance company to do well in the next 4-5 months ahead of this LIC IPO. So one can hold a HDFC Life. NAM India also, because of the corpus going up, they also expected to report higher profitability in coming days. And fundamentally as well as technically also, both looking very positive for NAM India. One can hold this NAM India. So Nifty has gone up 3% overall, whereas our portfolio has gone up by 8%.